Hey everybody, this is Mark Coe. Wanted to take a look today. What does the future hold for the US dollar? We are post FOMC last week, so it's March 20th, 2017. Want to take a look at what we have in store for us and what's a likely path for the US dollar. I know last week the dollar got hurt on a little less than overly hawkish Fed expectations, so the market had been expecting a little bit more. And so it was kind of interesting. Somebody asked me this question today: what did the FOMC statement mean, and why was it interpreted as bad for the US dollar? Well, it's pretty simple when you look at the explanation of what the market thought of the statement, right? It doesn't matter what any one individual thinks or how you can turn on the talking heads on financial news and hear what their thoughts are. Here's what ultimately matters to your trading anyway. What did the market think of it? Well, here's what the market thought of it. The market didn't view it as nearly as positive for the dollar in the short term as an individual may have thought, or regardless of what you think the course of FOMC is. You can argue lots of different points. You can argue the point of maybe the dollar had been bid up in anticipation, so this is the reaction. That's fine. It's all fine. But I think what makes the most sense is to say, when looking at the dollar, what is the general path of the dollar? And I think this can give you a lot of insight when you're looking at FX in particular. So let's start with dollar yen. Where does dollar yen come from? What has it done with all these rate hike expectations? Well, late November, the dollar, well, early November, obviously, the dollar starts its bull run. And so really what you're seeing here is a lot of consolidation, right? A lot of consolidation above 111.60. And that's a very key level. And in looking at kind of this area back from November, why this 111.60 is so key, on the up run here from the presidential election on through just shy of Christmas time, you saw a couple stall points where you'd see a little consolidation, and this is just the one that held, right? So you can look at the consolidation around 13.5, but this one around 111.60 is pretty key because it held for the last several weeks, and it's continued to hold as a base. So it's very well worth looking at and having that area marked on your chart. And so I peg it at around 111.60 to 112 the figure. I think you could probably extend down to 111.35 without doing much damage to the technical look to it. But with that being said, think about this from our wider perspective, our wider angle, and say, all right, well, the dollar is basically trading in a 115.30, 111.60 range. It's a wide range. That's all it's doing. It's not in an uptrend right this second, and it's not at a downtrend right this second. It's consolidating. It's consolidating all these gains. And if you go back to deeper time frames, you can find a bit more of a look and say, well, what is it doing in perspective with where we traded, a year and a half ago or 5 years ago? And so you can give it a little perspective. But I think what's key is to say, what is the dollar doing at levels that matter? Right? So if you were to look at this dollar yen and say, okay, 115.30 on the top, 111.60 to 112 on the bottom, everything else is just that in the middle. It's just trade in the middle. And we can look at it on as short a term as we want and say, well, it's really sold off. It's really bearish in here. But let me ask you this question. If you go back to this section of the chart, 111.70, up to this little bull run, would you want to be aggressively selling dollars into this section where the market took it 3-4 big figures higher just a couple weeks ago? That's what you'd be looking at from this section. So rather than ask yourself the question, where does the dollar trade for the next 10 or 15 ticks? Think about it in terms of this. If I can position at strong levels, if I can position at edges that show me something about the market, aren't I in a better position to profit? And so in understanding that, this market has come from just above 100, traded up to 118 and change, and now has pulled back two successful holds of this 111.70 area, 111.60, 111.70. It's had two successful tests. The problem is, for the bullish side, it hasn't been able to make any new progress up top. So I think the way you want to look at it is this. To position for a bull run in the dollar, you want advantageous positioning. That's what you're looking for. The only place you get that in this section is down at this 111.60, 112.20. It's a wide area, but it's down in this section of the chart. So I would say from a dollar bull point to be patient. From a dollar bear point, last week was really your opportunity, wasn't it? I mean, up in this section of the chart, it was really your opportunity if you were of the bearish mindset. Now, granted, a lot of people won't necessarily have longer term opinions. They'll just want to trade the momentum of the day, and that's fine. But understand that when the dollar comes into those battle zones, there's real effort being maintained to try and get the dollar one direction or the other. So those become zones where you really want to pay attention to what is the reaction, right? That's what you want to pay attention to. What is the reaction? So I'll just give you a recent example. If you look up at the 118 highs and you say, okay, first time up there, maybe it's a pause. That's fine. But the second time up there when the dollar fails to make new headway, you have to be thinking of that area as very strong resistance. And surely the market was able to get it off that top. Now down at the bottom, the market has been unsuccessful to this point to pierce that level, to actually take out that level to the downside. And without probably a lot more negatives and a lot more headwinds for the dollar, you probably see levels in here establish very good buying opportunity. Now granted, on a move through there, successful move through the bottom side, I'm sure you will see some long capitulation. But I think the favored path of more rate hikes to come from the FOMC and continued easing out of the BOJ, that the long-term prospects of a much weaker dollar yen are going to be hard fought. With that being said, I still think you need to look at the levels and understand what is the reaction at these levels. So from a dollar index standpoint, and I think it's beneficial to look at the dollar index and judge, are we in a bull, are we in a bear run, what's really going on in the dollar index? And it becomes a lot easier to kind of diagnose how you'd like to be positioned. But I think from many different currencies and the dollar index in general, what you're going to have to say is that further losses for the dollar are going to be tougher at these zones. And you see why. I just went through dollar yen, now looking at the dollar index, and I can do a very similar thing here on euro dollar. What it's going to show you is a very consistent picture across the board of very key levels of resistance for further dollar losses. So with that being said, be patient. If you're of the dollar bear side, understand what you're up against. If you're of the dollar bull side, understand what you're being able to position to lean against. Right? I'm not suggesting to you that the dollar can't sustain further losses. What I'm suggesting is that those losses are going to be tougher to come by. And that's what I want you to pay attention to and understand. When you can go across the board and look at the dollar against a number of currencies, you can look at the dollar index and understand the losses it's taken to get to this level. What do you diagnose for future losses and how much tougher do those become? So if the dollar is going to continue to weaken, then something else is probably at play here that may not be as evident in the market now. So I'm still of the opinion that I want to continue to try to buy dollars at advantageous levels and position for further strength out of the dollar. And I will continue to position that way until proved wrong. But now what it leaves me is the ability to position that at much more advantageous levels than I've been able to over the last couple weeks, because we've seen a stronger dollar. Now you've seen some weakness that you can actually buy into. So anyway, that's kind of my thoughts on this 20th of March. We'll continue to watch the dollar index, the US dollar from this point, but I wanted to give a little currency insight. We talk a lot about the futures and gold and crude oil, so I wanted to give my currency friends a little love here and take a look at the US dollar. So for Mark Coe, I will bid you all cheers and talk to you soon. Thanks for watching.